Okay. There it is, right there, you motherfucker. Excuse my language. Okay. See if that done it. Yeah. Why isn't that one turning on? What the hell's wrong with that one? Okay. This one's not working. There it is. All right. I think we got it. I think we got it. Okay, that's working. 9:19 p.m. It is Sunday. Tomorrow the market opens again. Yay! Jolly good. Anyway, let's get the ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. I know it sounds boring, sounds not quite not enough, but I tell you what, I'm retired. I don't really need the money, but here's the thing. If I'm getting 1% every week, yes, that comes to over 50% by the end of the year. That's how I'm able to retire and live comfortably. The money I accumulated throughout my lifetime, well, now I am responsible for it. It means I get to decide where my money goes. All right. But knowing where I'm coming from the beginning will give you a good idea of where I'm going. I'm not interested, seriously, I'm not interested for the next meme stock that shoots to the moon. I'm not interested in cryptocurrency. I'm not interested in, what do you call it, day trading. Certain things I'm just not interested in because of where I am at this point in my life. I'm retired, which means my choices that I make with my money have to be a little bit more thought out. Because however much money you think I have, I don't. I make enough. I make just enough for me to live comfortably, and I'm perfectly okay with that. It's 1% that I'm looking for. Specifically, two things. One, consistency of profitability. Money coming in every single week. Number two, preservation of my capital. I do not want to lose, so I go into every trade with that in mind. I want to make sure I'm only picking good companies, companies I'm okay with owning long term. However you consider long term, mine's 30 days, but that's besides the point. I got no problem selling something once it hits my target. But here's the thing. Stocks go up, stocks go down. It's easy to watch on a chart. As it goes up, it also comes down. Look for the patterns. What are we, you and I, we are the buyers, we are the sellers. What are we doing? Well, we, this example here, what the hell is MLI? Whatever it is, not showing. Damn it. I lost my point because it's not showing. Right there it is. 743,000 shares. Not a very good one to pick. Let's pick a better one. Let's go with AT&T, give you a little better idea of the numbers we're talking about. Okay, check this out. 42 million. Now, however much money I got, I cannot buy 42 million shares of AT&T. That's how many shares traded on Friday. Okay, so I'm just a small fish in this big, huge pond. I'm not looking to be the biggest and the baddest. I'm just looking to take care of my family. Now, I'm perfectly fine. Okay, I could do absolutely nothing, sit on a rocking chair for the rest of my life, and I will be perfectly okay. But that leaves nothing for my children and my grandchildren. I know nothing about my grandparents, hardly anything. I would like my grandchildren, my great-grandchildren, and them beyond, know who I am, know who I was, know what kind of a person I am, what I stood for, and how their family got from where they are as opposed to where they could have been. I don't know, besides the point. What I'm looking for is I'm looking to leave a legacy more than I got left. Now, my parents, they probably did the best they possibly could. I'm trying to do a better job. That's it. I'm just trying to do a better job than my parents. I want to leave something for my children, my grandchildren, my great-grandchildren. I want something to keep Well, let's call it vanity. Keep myself relevant in the future, in the future lives of my grandchildren, great-grandchildren, so on and so forth. Oh, I don't like that at all. That wasn't nice at all. Anyway, besides the point, let's get back to what we're doing. We're investing in dividend stocks for a weekly cash flow. Simple, safe, predictable, all that kind of nice, neat, fun stuff. So, you guys are going to give me stocks to take a look at. I'm going to run through the mill, show you exactly what I do. Wait a second. Hold on. I got to reverse the camera because it all looks backwards. I can only do it on two. Because the other cameras do not allow me to reverse the images. So out of the 9 different channels that I'm on, only 2 of them make everything look normal. Come on. Where was it? All right. There it is. All right. So before we go on, I want to say hi to everybody who's in the audience. So that's going to take me a little bit of time. Who do we have over here? We have Aaron. Aaron's over here. Patrick, we'll take a look at Lowe's in a little bit. Up, down is here. Silmar. What is that? Up, down, what is that? Silmarils. Whatever that is. Holy cow, a lot of people. Got rid of a bunch of people. What's happening? Okay, so apparently someone got in here and started, okay. ETFs or single stocks. Stephen, I got no problem whatsoever. You give me a good ETF, I will take a look at it. And I'll give you my opinion. But you got to remember where I'm coming from. I'm retired. I'm not looking to hit a home run. I'm looking for a single. I'm looking for, bunt, just get on base, so to speak. Okay? He was spamming. Thanks, dude. Woohoo. Okay, so that being said, you gave me a good ETF, I'll take a look at it and I'll tell you whether or not it fits. Remember what I'm looking for. Simple, safe, predictable, 1% per week. So let's see what you got. Give me what you got. Sylvia, good evening. Okay, who do we have over here? Over here, we have Hazel Eyes, Jesus, Josie, Freckled Queen, back again. Hi. Rajesh, Cool Breeze, Honestly, Steffa. All right, Steffa. M. Zoli, Freckled Queen, Andy Panda, Mr. Darrell, Mr. Steve. Uh-oh, MF or LOL. Not quite sure what that is, but okay. Yes, I'm aware it's closed tomorrow. I'm just here. It's routine for me. Okay, after 2 or 3 days of doing nothing, I want to get back and I want to do some more sharing if that's okay. Camp Road, we'll take a look at it. Can you flip the screen on TikTok? I already did. Niculator, thank you, brother. Okay, who do we have over here? Real Facts Matt. All righty. KBN, Clayberry. Yeah, I know the markets are closed tomorrow. I get it. But, I'm used to coming on Sunday nights. I've been doing it for 2 years. I got a new habit. And I'm okay with it. Why 30 days? Philippe, hold on a second. I'll get to that question. Bitcoin, no. I'm going to explain about Bitcoin in a minute. Crypto rich bitch. I'll talk to you in a second. Clayberry, all right. Mattered wants to take a look at Wally World. Okay. All right. Following the live. Cool beans. Visa, SCHD. Oh my goodness. What do I think about RE? Okay, we'll get to that one also. All right. So we got a few to take a look at. So let's get started. First and foremost, we got AT&T on the board, so let's take a gander at it. Now, when you see what I'm doing, I'm basically don't want to sit in front of my computer. I don't. So whatever you think, I can bet you're wrong. Okay? I turn my computer on somewhere around 8:45, 8:30, 8:45 to get on the live show at 9. Well, because I don't want to be on the computer all day. I have other things to do. Okay, so turn on the computer. First thing I want to see is the 1-year chart of whatever we're looking at. Now, when I say whatever we're looking at, what me and my crew are looking for are companies that are consistently profitable for at least 2 decades. And every single week, we got 5 days. So next week, I believe it's week number 5, 6, 7. I think it's week number 7 for the year. So there's only 13 weeks in each quarter, so we're already halfway through the first quarter. All right, so we're on week 7. So we want to take a look at all the dividend stocks that are coming up for consideration this week. And the first thing I want to see is the 1-year chart. So let's slide this over, take a gander at it. I'm looking at 5 things. And these 5 things should take you anywhere between, you ready for this, 3 and 4 seconds. That's all it should take you. When you look at a chart, 3 or 4 seconds, that's it. Because you're looking for 5 things and they are so specific, you cannot, like this, listen to this. You cannot not see them. Do you know what I mean? I'm going to show you what to look for, and you cannot not see them. Are you ready? Here we go. Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it now? Right there. And finally, number 5, this one takes the longest. Are you ready? Watch. Up, down, up. That's it. It should take you 3 to 4 seconds to find that. 5 things. High, low was his direction. That's it. Once you see that, automatically, next step. Is it at the ultimate high? If so, next. Do you know why? Because the bottom here and the top here, it already made the gain that we were looking for and we didn't see. This is why we look every week. Because if we looked last week, we would have caught it right about here. If we looked 2 weeks ago, we would have found it right there. That's why we look every single week. And that's why we have a crew. And our crew sees more than I can see. Because I don't live in front of the computer. I have a life. I do other things. Yeah, I know, I'm retired and I don't actually work. But I'm still playing with my money. Because I'm responsible for my money, which means I'm responsible for all the money of my family, which means when I'm gone, 25% goes here, 25% goes there, 25%, so on and so forth. So I'm responsible to make sure my children and grandchildren are taken care of when I'm gone. So that's what I'm doing here, creating a video log for them to watch. So besides that, for those you following, you probably know. Grizzy, thank you there, Grizzy. All right, so I'm going to say no to AT&T because it's at the high of a 30-day period. If I zoom into it, this is where we wanted to jump in right there. I'm not going to stay there because that's a bunch of BS. I'm not going to blow smoke because I look for the bottom. I look for 2 days up, 1, 2, and on the 3rd day I would jump in here. So no, I'm not going to say I jump in down here. No, no, no. 1, 2, 3, that's my entry. That's my entry. And if you go back and watch all my videos, you would see I jump in 2 days of the upside, and on the 3rd day, if that's up also, that's where I jump in. Okay, I'm not going to blow smoke. I'm just telling you right the way it is. I've never in my life ever picked a bottom, and I've never ever found a top. So I don't even look anymore. I want to see where the bottom is, right there. Then I want to count 2 days of the upside, and then on the 3rd day, I'll jump in. Well, no, because we already missed that opportunity. Next. That's it. Don't spend more time on it. If you want, hold on, let's just back up a little bit so we can see the whole thing again. Okay, if you want, and it would make sense, make a note. Okay, it's at an all-time, well, it's at a 30-day high. So I want to look at it again in 2 weeks. So I'm not going to look at AT&T again for another 2 weeks. But I like AT&T because I'm thinking profit taken, about 2 weeks, be back down around here. But I'm not going to keep my eye on it. I'm going to put it on the calendar for 2 weeks from today. Then I'll look at it again. What did it do? Was I right? Was I wrong? How do we adjust? Because this is a daily thing for me. Think of it this way. Okay? You shower every day. Okay? You take care of your hair, you shave, or, ladies take care of what you do every single day. If you have children, you feed, water, make sure they're okay. What about your pets? Your dog, your cat, your bird, your fish. You feed them, water, take care of them every day. So why don't you do the same thing to your money? If you take care of your money and you cultivate it, it will grow year after, well, actually here, week after week after week. And 1% a week is not a lot, and I'm terribly sorry if you feel bad about that. But I'm not looking for the amount of money. I'm looking for the consistency, predictability, and the safety. Did I throw profitability in there too? Because out of last year, I must have done at least 25 to 3,500 trades. 7 accounts every single week, all year long. And I've been doing it for the past 2 years and sharing it for the past 2 years. Okay, now I did that and I'm continuing doing it because I know for a fact in 20 or 30 years, I can tell my children, don't bitch and moan. I did it every single night for 2 or 3 or 4 or 5 years, however long it's going to be. So I'm building ammunition now so that in the future, when my grandson gets to that age, I say, I don't want to hear you bitching and moaning. I actually did it. There's actually video proof of me doing it. All right, anyway, you don't want to hear all that. But next, I love AT&T. I do. I'm going to put down the list for 2 weeks from today. I'm going to write it down. Yes, I am so old school. I physically write it down. I've had many. Now, a lot of you may not know this, but I remember 56K dial-up. Okay, I remember when the internet was invented and given out to us. So I'm witnessing the whole thing. So yeah, many, many, many years of computer usage. I have lost everything on a computer more than once. That's why I write stuff down. Okay, none of that put up to the cloud. None, no. Written down in a book that I can actually feel and touch and taste if I wanted to eat it. You know what I'm getting at? Anyway, next on the list, someone mentioned something about Visa. No, someone was before Visa. I think it was Wally. We're right there. Nerderd. Is that right? Naderd. Naderd 75 wants to take a look at Wally World. WMT. Really quick. Now I'm going to hit this button. The screen is going to flash, and I want to see count how many seconds high, low, where is going. You know, all that stuff. Ready? Here it goes. Whoops. Let me try that again. Wait a minute, WMT, no, come on, WMT, there we go. Now do it, there we go. High, low, was, is, look at, no thank you. Less than 5 seconds, no thank you, next. Now don't get me wrong, I love Wally World, I really, really, really do. Look at all the opportunities we missed. Down, up, down, up, down, up, down, up, down, up, down, up. I can do this all day long, that's all stocks do. Now we missed Walmart a whole bunch of times. Look. Perfect time to jump in, perfect time to sell, perfect time to jump in, perfect time to sell, blah, 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 blah. That's why we watch every day. That's why the crew always looking at new stuff. I can't see everything. And every once in a while, I say, hey, James, let's take a look at this. I say, oh, why didn't I think of that one? That's why we're all here. All right. Would you, we'll get to RR in a minute. Let me slide down here because I got a lot. Oh, my God, you guys got a lot of questions. All right. Patrick wants to take a look at Lowe's. Lowe's is one of my favorite also, if you didn't know. Okay? Just like in baseball, just like in football, just like in hockey, the stock market has the cream of the crop. They have the best performers. Okay? Depending on what you're measuring. The way I look at it, I'm measuring profitability. And that's it. I really don't care the hottest product. I don't care the most amount of shares. I don't care any of that stuff. I'm looking at, wait a minute, how long till you wait to text back? This is live, so I'm not actually texting. So someone on one of the channels said, how long before I actually text back? Doesn't work that way. All right, now I got sidetracked. Squirrel. Yes, I do have ADD. I admit it. I'm an adult. I take responsibility more than I can. ADD. Anyway, what were we talking about? Oh, the opportunities. They come and they go every week. Yes, and as I was saying, they rank the stocks. I look at profitability. The cream of the crop, the dividend kings. Now, the dividend kings are companies that have consistently increased their profits consecutively for 5 decades or more. Imagine that, 50 years or more, a half a century or more, increasing their profits year after year after year after year. And yes, there's a whole bunch of people that watch like a hawk. Okay, you cannot be a dividend king unless you're successfully increasing every single year, higher and higher and higher. Okay, that's list number 1. List number 2, dividend aristocrats, 25 years consistently profitable. And Walmart is 25 years or more. They're on that list. Now, the other one we looked at, which one did we just look at 2 seconds ago? Oh my God, don't get old. Stuff slips, it really does. So, this, 25 years of increased profit. So yeah, it's on the list. Okay, let me get back some of these questions. Lowe's, Patrick, that's where I was going with that one. Patrick wants to take a look at Lowe's. Here we go, 1, 2, 3. Uh-oh, not Coca-Cola. L-O-W. Ready? Here we go. I'm going to count how long it takes you to say yes or next. You ready? High, low, was, is. Look at the movement. Next, it's at the high of the year. Don't get me wrong, I love lows. Look at all the opportunities every single year. All you got to do is just keep your eye on it. It takes less than 10 minutes. That's why it's called the 10-minute trader. Okay? It's supposed to take less than 10 minutes. So yeah, everybody has a busy life, but you got to squeeze a tiny bit of that 24 hours in to take care of your money. Because if you don't do it, you're giving up accountability, you're giving up responsibility, and you're giving it to someone else. If you're not making a return on your money every week, then you're just passing it off to someone else. And there's nothing wrong with that. Really, the status quo is perfectly fine. Okay, those of you out there who know the status quo is not good enough for you, fine, hang around, ask questions. Ask yourself the number one question. Now, I'm not trying to sell you anything, but the number one question, does it make sense? That should be the very first question. So let's keep on going. Why 30 days? We're going to get to that question in a minute. I'm starting from the top of the list of all the questions, going on the bottom. But please, I got 1, 2, 3, 4, 5, 6 different sets of questions. So I can only do a little bit at a time. All right, we did Walmart. Okay. So crypto rich bitch. I don't do cryptocurrency here. Now, we are introducing our own cryptocurrency only because I want to control my own money, literally. But I don't buy and sell and did tips here on cryptocurrency. That's going to be a different channel altogether. Bobo, what's happening? How are you? Scarlett, good evening, sir. Thank you, thank you. Crypto Richie, thank you for that, Crypto Richie. I hope one day I can say I don't need the money. Bobo, you'll get there. It's just consistency. That's it. Okay? But think about it. At some point in your life, money will lose its, remember that movie with Arnold Schwarzenegger, Conan the Barbarian? There's a time in every man's life where gold loses its luster and diamonds cease to shine. Nothing means more than family. Money will eventually be a lesser thing to worry about if you take care of it now. Because the best time to do it was yesterday or 10, 20 years ago. But if you're here now, well, you have the opportunity today to say, you know what, I'm going to start taking care of my own money now. And you don't have to listen to me. Just listen to yourself. You know, what makes sense? Can you flip your screen? Okay, Laurie already did that. Camp Road, OWL. What the hell is OWL? OWL. Blue Owl Cap. Okay, never heard of it. So I have no clue on how to speak on it, but let's take a look like we do every other stock. Okay, it's just a stock, that's all. We take a look, what are we looking for? The high, the low, where was it, where is it? Down, up, sideways, down, up, down, up, down. So it's coming down right now, so it's really not that favorable, okay, to go to the next level. Then the next level will just have us looking at the numbers. So if this doesn't even pass the first test, there's no chance of even going to the next one. Because if we zoom in, look at the last 30 days. Okay, 30-day high, 30-day bottom. As it bounces off the 30-day bottom, that's where we want to jump in, but it fizzled out. Okay, next. Now we're looking before we jump in. Now, if we were here, oh, that would be a yes. So it's a good thing that we missed it. Anyway, but we got to remember the rules. Rule 1 is never buy something you don't want to own long term. So you'd have to go back and say, do I even know who this company is? Well, I don't. Well, let's go figure it out. Let's go. Here we go. To Yahoo Finance. Now, wherever you get your information, okay, make sure you have access to a financial website so you can actually see the numbers. So here it is. Here's Blue Owl. Now, what we're looking at here is called the historical data. Okay, historical means last year, the year before, the year before, the year before, so on and so forth. What do I want to look for? Remember I told you I want 2 decades of increased profits? So I'm taking a look at the profits, the dividends, because a dividend is a portion of the profits. Are they increasing? Are they decreasing? And how many are there? Well, let's go find out. Okay, so apparently 2021 is the first time they've ever paid a dividend. The first time they're sharing their profits. So you know that 5 years, because 2021, we're in 2020, that's only 5 years. I want 2 decades. That's 20 years. 5 years is not old enough for me. But let's take a look anyway, because somebody liked it. Okay, let's take a look. So it goes 4, 9, 10, 11, 12, 13, 14, 14, 18, 22. Not bad. 5 years of increasing dividends. If you're okay with 5 years of increasing dividends. Okay, they're increasing. Okay, the opportunity's there. You have to ask yourself, is this look attractive? Well, if you like it, keep your eye on it, because as it's coming down, it's going to get to a point where she turns around and goes back up. Unless the company is in bankruptcy, which is one of those things you should look at and take into consideration before you buy. If the company's in bankruptcy, don't buy it. If it's not in bankruptcy, if they've never filed any issues whatsoever, it's bouncing off the year bottom. And when it does bounce off the year bottom, that's the time to jump in, because you make the most money when they buy low and you sell high. And I'm terribly sorry if it just makes sense. See, I'm at that point in my life where I'm so old, I forget the lies, so I just don't lie anymore. As crappy as the truth may be, there it is. Deal with it, you know? All right, anyway, so Owl, I have no idea who they are. We know they only have 5 years of increased profits or increased dividends, and the 30-day bottom was last week. She went up, fizzled out. Not the greatest buy me signal I've seen, but if you like it, write it down. Maybe during the week or maybe next week, she'll find the bottom and turn around. If you really like it. It always comes back to, does it make sense? Is this a place for me to park my money? Because that's what we're doing. We are in charge of our own money, or we give it out to someone else. So you ask yourself, do I like this company enough to buy it and hold on to it and feel okay and not have any sleepless nights? Not me. It's a 5-year-old company as far as I'm concerned. I want 2 decades. Now, I'm terribly sorry for those who do like companies like this and do like ones that don't meet the criteria that I'm looking for. But you got to understand where I'm coming from. Okay? In the latter part of my life. The latter part of my life where I have to be more cautious with my investments. Now, for some of you younger folks, this may be too slow and boring for you. Because it is slow, it is boring, it is the same thing over and over and over again. I'm buying the same stocks over and over and over again. You know the neat thing about this 2-year project that I'm working on? Actually, we're going to year 3. This is like a 3-year project. You will notice that I'm buying the same stocks I bought 3 or 4 years ago. But if you go even further back and dig deep enough to find my blog posts from 2011, which was what, 14, 15 years ago, okay, I started blog posts 15 years ago, the same things. You'll basically see me doing the exact same things over and over and over again, because I come from that era where if it ain't broke, don't fix it. If it's working fine, leave it alone. You know, those type things. Anyway, let's do this. No, let's find another one. Who got something? Is your mic plugged in? Muted. No sound. No, I see the, oh, you know what? The phone in the other room is being used. This phone is piggybacking off of the other phone. So when the other phone is being used, which I can hear her on the other phone, you don't have any microphone on this one. That way it doesn't interfere with the pub, because they're not broadcasting the conversations she's having with her sister. So that's why you can't hear it here. But it is live on 8 other different channels. Okay, so the 8 other channels, you're on channel number 9. You're in the newest channel, and the newest channel has not been ironed out the bugs yet. Sorry. Anyway, OWL. Again, don't know it. All right, so Nadird wants to take a look at Visa. Love Visa. Let's see if we can do it. Again, you ready? Challenge yourself. See if you can do it in 5 seconds. Ready? High, low, where it was, where it is, where it's going, blah, blah, blah. Here we go. Visa, what do you think? High, low, was, is. Look at this. Down, up, down, up, down. Hell no. Not really a no. And you know why it's not real? It's no for tomorrow, but it's not no for next week. And you know why? Because she's definitely heading down. But look at this big drop here. Okay, you should have noticed that within the first 3 or 4 seconds, because remember, you're looking for 5 things. The high's there, the low's there. Where was it? Over there. That's where you're focusing. Where is it now? Now you're focusing here. What the hell's going on there? What's the direction? What the hell's going on there? Now you saw it twice. Okay, remember, 5 things. The high, the low, where was it, where is it? Now that I'm looking at where was it, where is it, what the hell's going on there, because it sticks out like a sore thumb. I'm going to zoom into it in a second. But the direction, down, up, down. Again, exact same spot. What the hell's going on there? Now I want to zoom in a little closer, and this is why I'm saying I'm not going to buy it tomorrow. I would love to think that that's the bottom, because anything above that's going to be good. But like I said earlier, I'm not going to claim to pick bottoms. It's not my thing. I picked the third day up because it's easy and obvious. And the strategy I'm showing you was created for my 9-year-old daughter. Because 16 years ago, she said, "Daddy, what are you doing? Can you teach me?" So my 9-year-old daughter wants to learn how to read stock charts and trade in the stock market. So that's where the 10-minute trader strategy came from. Simple. She's 9, safe. I don't want her losing. Predictable. I want her to be right all the time. And no way to lose her money, because I want her happy. Because I don't want to sleep on the couch. And you guys know what I'm talking about. Okay, little baby girl loses her money. Who's sleeping on the couch? Daddy is. Yeah. No, thank you. Simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to come up with. Okay, 5 rules. Simple. You ready? Now, you shouldn't need to write these down, but you can if you want to. Rule number 1, never buy something you don't understand or you don't want to hold on to for the rest of your life, because you just might have to. Okay, make sure it's a company you're okay with putting your money into. That's step number 1. Number 2, never sell at a loss. What sense would it be to sell something for less than what you paid for it if it's giving you money every single week? Think about it. If I buy at 100, now it's at 50, but it's still giving me money every week, why would I care what the price is? I'm not concerned about the price. I'm concerned about how many shares I have, how many contracts I can sell. Now, if you don't understand, hang out for a little bit. Everything will come together like a good movie. Everything will make sense at the end before the credits run. Okay, what we're looking to do, simple, safe, predictable, consistent trades for a 1% weekly return. My number 1 objective is to answer the question, does it make sense? It either makes sense or it doesn't. Okay, either do it or don't do it. Either pay attention, don't pay attention. But don't listen to what I say. Make a mental note of it and then go do your own research. Is this bonehead right? Is he full of BS? Is he blowing smoke? Ask the questions. Write them down. You want a better life? You want more money? You want more consistency? You want more profitability? Now, money's not going to buy you happiness, but it will make you happy, because anyone who says money can't buy you happiness, they just haven't given away enough. Think about it. If you had so much money that whatever cause you wanted to think of, you could give money to it. So yeah, money can't buy you happiness. Anyway, it all depends on where you shop, right, ladies? All depends on where you shop. So, if I like Visa, I'm going to write it down for not this week, because we already have our lineup for this week, and that's a no right there. Because remember, I want 2 days to the upside after a bottom. Bottom's here. So I got to wait 2 days. So the soonest I would jump into this thing would be Wednesday. By Wednesday, all my money's already invested on Monday. Yeah, I invest all my money on Monday. You know why? Because I'm an adult. Think about it. Think it through. I'm an adult. I know what my bills are on a monthly basis. I know what I spend on a monthly basis. And I know that I buy this week, Monday, and Friday, all that money comes in, and then I can do whatever I want next week. Same thing. So, yes, all my money's invested on Monday. So when Wednesday comes, that's when this thing would be ready. if this is the bottom. This is going to have to go next week. So I am writing it down for next week. Visa. Look at that, right there, AT&T. Okay. Next. Kind of took so long to get there, didn't it? We already did Lowe's. Nope. All right. ETF. So I'm waiting for Stephen to give me ETF. Thank you there, up, down. Ooh, ED. I'm going to say no to ED, which is Consolidated Edison. They are over 200 years old, but they have monthly options, and I don't do monthly options. But, Steve, I do like COP, ConocoPhillips. COP, ConocoPhillips. No. Wasn't that quick? Now, the reason why it's so quick, I took one look and I said, yep, no, thank you. Less than 2 seconds. Yeah, I get that. But Consolidated Edison's a monthly. Don't do monthlies, the numbers just don't work. ConocoPhillips is at an all-time high, and I don't buy at the high. It just doesn't make sense. But thank you there, Stephen. Patrick, David, Max. I think Ardo Metal Packing is a solid penny stock. Sorry, dude. Okay, if it's a penny stock, there's no possible way it has 2 decades, 20 years of consistent profits. Now, don't get me wrong. It may be great for what you're doing, but you got to remember, I'm retired. Penny stocks don't do it for me anymore. I did penny stocks many, many years ago. But you'll notice as you get older, your focus changes. Okay? You may not see it at this moment, but trust me, when you get to be retired, things change. It means you don't have to go to work. You don't have to worry about money. You got to make sure the money is safe and going certain places. So I don't do anything unless it's really, 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 really solid. Really solid to me, 2 decades of profits and weekly options. That's it. He doesn't do penny stocks, thank you. His main goal here is to look for good dividend stocks, buy, sell, cover calls. Awesome. For weekly income, awesome. You're always looking the bottom. Wait a minute, you're always looking the bottom. Are you relying support and resistance also? No. Patrick, support and resistance is basically for long-term investing. 5 days is not long-term. Okay, I'm taking a look at the momentum of the stock. What are the other buyers and sellers doing? So support and resistance doesn't have to tell me anything that it's at the high of the year. Can't tell me. Because support, resistance, Fibonacci numbers, what do you call that? Earnings, no, not that one. EP ratio, no, that ain't it either. The older you get, the more crap stuck in your head, so you're trying to get it out, and everything wants to come out at once. There's too much going on here to distort the reality. Let me explain what I mean by distort the reality. You want to talk about support, resistance, MACD, CDI, hold on. We can throw the Greeks in there also, Fibonacci number. We can throw a lot of stuff in there. Seriously, we really could. But I can get my grandson just turned 6 2 weeks ago. I can get my 6-year-old grandson can say, hey, Papa G, that thing's at the high of the year. I don't need all those numbers. I don't need all those indicators. I'm looking at logic and common sense. 30-day bottom, 30-day top. What usually happens that, wait. The 30-day bottom, let me go over the side so you can see better. 30-day bottom is 90. The 30-day top is 112. 90 to 112 is 22 bucks. No. Think the whole thing out. Okay, 30 days ago, we just jumped 22 bucks. $22 on a $90 stock, that is over a 25% increase. Think about it. You bought something, it jumps up 25%. You gonna ride that lightning all the way to where the hell, who knows where it's gonna go? The baby just jumped up 25%. You seriously think it's gonna go higher? Oh, wait a minute. Hold the phone. Let's go check. I don't want to say anything out of turn, because I'm a firm believer in facts. I love facts. Okay, so I like to look at numbers that are right there, and we can't ignore them. You cannot ignore numbers. Numbers don't lie. Numbers are what they are. You either agree or you don't agree. Okay? Screener, come on. And there's the number right there. Are you ready? Check it out. 10,934 companies. Let me say it again. 10,934 companies. Why would I pin my hopes on that it might go higher? Okay, I'm taking profits when they're there. I'm not trying to ride that wave all the way into shore, if you know what I mean. Think about it. It jumped up 25%. What makes me think it's going to keep on doing that? Take the profit when it's there. Oh, here's a good one for you. You ready? It's not a profit until you take it. But then again, nobody ever went broke taking profits. Think about it. Now, it could, seriously, it could continue going up. And there will be people holding on for dear life, regardless of what it does. And there's nothing wrong with that. You pick a strategy that works for you, you stick with it. It either makes sense or it doesn't make sense. Me, I want to jump. Remember the merry-go-round going round and round, and the horses go up and down? Okay, I don't know about you guys, but there was a certain point in your life where you wanted to go from one pony to the next, to the next, to the next. Well, that's what you did when you're at a certain age. I think everybody does it. But still, you're going round in circles. And what I'm doing is I'm jumping off one that made that 1 or 2%. I'm jumping onto another one, taking that ride for the 1 and 2%. And then I jump off of that and go into another one. That's all I do is to jump from one good quality company to another. Okay? There's about 10, we just did it, 10,900 different companies, 10,934 different companies. I'm only looking at 300 because only about 300 are consistently profitable year after year after year after year. So those are the only ones I want to look at. And yeah, I'll take a quick look at them, but if it jumps up, I'm getting out. I'm not holding on. I don't care what the RSI says. I don't care what the Fibonacci says. I want facts, and facts are facts. Okay, take the profit. Next. That's it. Let's keep on going. But that's just me. What stock is that? I don't remember. What stock was that? Ooh, ConocoPhillips. Now, I like ConocoPhillips. I do. All right, what do we have next? Fermi. Savage 125 wants to take a look at Fermi. What the heck is Fermi? Never a good sign. Fermi Inc. Can't find that symbol. So apparently, Fermi Inc. is not on the stock market in the U.S. Sorry. Rich Hawley, thank you for that, brother. Traveler, how you doing? Topher, I'm 58 years old, so same season life as you, big brother. Hey, thank you. My older brother's only 2 years older than me, so he'd be 64. Wow. Richard, ESPR, what the hell is that? Asparian Therapeutics. Hell no. Now, the reason, Richard, I'm saying no is I don't do monthlies. A monthly, February, March, June, September, January 27, January 28th, they only have options once a month. Think about it. Once a month means 12 times a year. So if I'm getting 1 or 2% with each trade, 12 times a year only comes to 12 to 24%. I prefer weekly. 1 or 2% weekly comes to 52 to 100% by the end of the year. I like that number better. Yep, I don't do the 50-day moving average either. I don't really care. It's kind of weird. CDR Loskeen Tholian Meta. Now, didn't I say I only wanted companies that have 20 years of profits? Let's put in Meta, M-E-T-A. Let's see how many dividends they have. Okay? Are you paying attention? Okay, check it out. Meta. 2 years, 2024 and 2025. They haven't even paid out a dividend this year. That's 2 years. I said 2 decades. Okay? Meta ain't going to happen. In 18 years, maybe. Albemarle. Now, I like Albemarle. There's no name, so I can't give credit to anybody there. Whoops. Albemarle, A-L-B. Now, Albemarle is on my list. And it's kind of quizzical. It means I'm thinking about it. What am I looking at? The high, the low, what is this? Look at this. Down, up, down, up. Okay, what's going on there? I want to see that. It's got my curiosity, but I'm not going to stop and look at it. Before I zoom into it, I want to check the numbers. Okay? Oh, I didn't finish the rules, did I? Okay, hold on. We'll get to the rules in a minute. It's currently at 166.35. Now let's get to the rules. Rule 1, never buy something you don't want to own long term. Rule 2, never sell at a loss. Like, that just makes sense. Rule 3, this is a tough one for everyone. Make sure the company is consistently profitable. You have to decide what consistently profitable means to you. So the CDR Loskeen Tholian, okay, 2 years is enough for her. And there's nothing wrong with that. Absolutely nothing wrong with it at all. Okay? But what I'm saying is, it doesn't work for me. I want 2 decades, which is 20 years. Because almost anybody can throw money at something to make it look good for 2 years. But can they do it for 20? Can they be consistently profitable for 20 years? Now, we already know that there's 10,934 companies. So why would I pick one that doesn't meet the criteria? I don't care what the chart looks like. They only have 2 years of dividends. So once they start sharing for 20, then I'll be more serious about it. So, numbers. Ooh, rule 3, make sure the company's consistently profitable. More profits year after year after year, which means increasing dividends, because the dividend is a portion of the corporation's profits they give back to us. Think about it. If the company's profitable, they got 2 choices. There's going to be a lot of 2 choices because it is what it is, whether you like it or not, really irrelevant. Yes, no, high, low, hot, cold, hard, soft, and you got 2 choices. That's it. Make sense? Doesn't make sense. I like this company. I don't like this company. Okay, do it myself, give it to someone else. See, everything, 2 choices. Where was I going with that? Okay. So, that's what I was saying. Is it profitable? Is it not profitable? Well, Meta has 2 years of dividends. That's it. Okay? AT&T, 20 years. Okay? Consolidated Edison, 200 years. Coca-Cola, 140-something years. Big difference. Meta, 2 years, yeah, no thank you. And don't give me that REIT stuff. Yep, there's a lot more people, a lot more money, but it is what it is. The company's only been giving out profits for 2 years. No. Sorry, no. Albemarle is right there, but Albemarle, I want to take a look at this. Okay, I want to zoom into that in a second. Rule 3, make sure the company's consistently profitable. For me, that's 2 decades. Rule 4, weekly options only. And then rule 5, that's where we are at this moment in time. Rule 5 is make sure all the numbers work. So let me explain. What are the numbers? Well, the numbers are what they are. And you cannot argue. The one thing I really like about the numbers for the stocks are written down somewhere. So everybody in the world who wants to see Albemarle's high for 2026, there it is right there. Anywhere in the world you can look and you will find that number. Okay, so what is it at this moment? At this moment in time, which is 10:07 p.m. Eastern Standard Time, February 15th, 2026, the price of this stock is $166.35. It is what it is. $166.35, $166.35, $166.35, $166.35. That's the current price. It will be written down for infamy. What was the price on February 15th, 2026? There it is. So, do the numbers work? What's the price? 166. Great. What's the closest strike price? Now, the strike price, what I'm doing here is I'm buying the stock first, and then I'm selling it immediately. I'm not holding on to it. I'm controlling it, is what I'm doing. I buy the stock 166. I automatically and immediately sell it for the closest strike price that's going to make the most sense. Rule 5, make sure all the numbers work. What am I buying it for? 166.35. What am I selling it for? 165. That's less than what I paid for it. Stocks only go two ways, up or down. So if it's going up and I'm selling it for less than I paid for it, and I'm making over 1% every single week, why the hell not? Albemarle's on the list. It's one of those stocks out of those 300. Albemarle's on my list. So, does the numbers make sense? 166, I'm going to sell the 165, it's going for 595. Well, what does that mean? Probably doesn't mean anything, so let's get the calculator. Let me explain to you what it means. If, you know what? The number sounds good. Let's do a sample. We're actually going to do a trade right now so you can actually see how it works. Now, if you're new here and you didn't know this, the screen here is live right now on YouTube. It is actually being recorded at this moment in time. So tomorrow, you'll be able to watch this whole thing all over again. Or actually, you can watch it as soon as we're done. But I forgot where I was going with that. All right, we're going to zoom in and take a look at this area right here, just to make sure it works. And then we're actually going to do a trade to show you. I'm going to buy it first thing in the morning, 166.35. I'm going to sell it first thing in the morning at 165. This is what I'm going to collect. What rate of return is that? To find the rate of return, you take the profit and you divide the price. The profit, we're going to see what that is in a second. Whatever the price is going to be, we're going to see that in a second. Let's do this. First thing we want to do is get rid of this because we don't need it anymore. Then we are going to change from single stock option strategy to covered call or covered stock or buy right, whatever you want to call it. So you buy the stock, you sell the option, and you collect the profits. The stock doesn't even need to move. It can stay exactly where it is, and we still make a profit. Don't worry, it's going to explain itself as we keep progressing. All right, let's do covered stock right there. Now, remember I said 165? Okay, the 165 is right there. What it's going for? Right there. So I'm going to buy it. There's the order right here in green. Now I'm going to change it because I have it preset for 10, for 1,000 shares, 10 contracts. I'm going to change it to 1. That way you'll understand what 1 costs. And then you can decide, does it make sense to me? All right. So we're going to change this to just 1 instead of 10. Okay, right here, see? Just 1. And then we're going to see how much that costs, what is our profit, and does it make sense? Well, there it is right there. The only thing I got to do is hit that send button, and it goes right to the market maker. And as soon as the market opens up tomorrow morning, I will own that. Well, let's take a look. So it says, buy 1 covered call, Albemarle, February 26. That means I'm buying the stock and I'm selling the option, which is going to expire this coming Friday. So it's just for 1 week. Buy it first thing in the morning, and don't give me that crap. I know it's going to be Tuesday, not tomorrow. All right? Okay, so we buy it first thing in the morning, sell it first thing in the morning, collect my profits, and here's the thing. Whoever bought the option, they paid $535 per contract. 1 contract, $535. 2 contracts, multiply it by 2, 10 contracts, so on and so forth. Each contract is going to pay me $535. Now here's the thing. Once I buy the shares, I can write 1 contract over and over and over and over and over again until it reaches my price. What's my price? Well, my price for me is less than what I paid for it because I want my profit, and then I want to do it again next week with something else because this may or may not be worthy of holding on to longer. So buy, sell, buy, sell. 1% a week, 52% a year. It's not that bad. Anyway, so here's the trade right there. The 165 call option. See, I'm buying it at 166.35. I'm selling it at 160.5. I'm picking up $535 per contract. Let's see what that profit is. To find the profit, we take the calculator. We take the profit, $535, we divide it by the investment, okay? Think of it as a vending machine or a soda machine, candy machine, or even a rental house. You're going to have to pay for that asset, and that asset gives you a rate of return. Okay, candy machine, soda machine, that might give you a return every couple of days, depending on how much work and time and effort you want to put it. Real estate, same thing. Put a big chunk out there. Every month you get a rate of return. Well, this one we're looking weekly. Okay, I want to do it on a Monday, and I want to collect my profits for the week. And then the following Monday, I'll decide what to do again. I'm retired, so I don't mind 10 minutes a day. Anyway, 535 is the profit. See right there? Max profit, 535. Cost of the trade, including commissions and fees. Let's say 16,000. It's actually 15,595. All right, 15,965 gives a grand total of, ready for this? 3.3% for 1 week. All right, so wrap your head around this. Number one, I'm buying a company that I like, because remember, rule one, always buy something you like. Okay, Albemarle. It's on my list. I don't know about yours. It's not a suggestion. It's not a recommendation. Okay, we're just a sample. Somebody want to look, we're looking. Okay, so if I'm buying at the current price, 166.35, I sell it for 165. I walk away with 535, and that 535 just so happens to be 3.3% for 1 week. Now, if 1% a week is 52% a year, 2% a week is over 100% a year, 3.5%, well, it's definitely over 150, 160% by the end of the year. And no, that's not saying that's what you're going to get. I'm just saying the numbers are what the numbers are. Number one, you either like the company or you don't. Now, don't get me wrong. I love to just collect the dividends. It's wonderful. Yay. But can I get 1% a week by doing that? No, I cannot. Now, Albemarle is bouncing off that bottom. Okay, fine. It's a company I don't mind owning. Fine. I'm buying it at one price. I'm selling it for less than what I paid for it. I'm still walking away with a profit. Here's the thing. If it is 165 or higher come Friday, well, the following Monday, I'll get all my money back. Every penny of the 15,965, I'll get all that money back. And I will collect the 535 for think about being the middleman. Okay, hey, I'm going to buy some stock. Can I get you some? Sure. You know, hey, I'm running to the store. Can I get you something? Sure, it works the same way. Okay, instead of going to the store and buying a six-pack or buying soda or buying something at the store as a favor for your friend, well, I'm going to the stock market, getting some shares, and I'm selling them to someone else, kind of like being the middleman. I'm going there anyway. Can I pick you up something? Oh, cool, 535 you're giving me? Thank you. If not, if it's below 165 on Friday, I keep the stock, I keep the 535, and then next week I sell it to someone else for whatever seems to be the most logical strike price next week. So what am I looking for? What did I buy it for? What did I sell? Where's it at now? Where does it look like it's going? What should I do? It's really not that difficult. It was created for a 9-year-old. Uh-oh. Hold on a second. So, beginning of the week, let's introduce you to the 9-year-old. I know you're just dying to see. Okay, here we go. The 10MinuteTrader. That's the website. We're going to go to... I got to fix my website, by the way. It's crap. We're going to go to YouTube. All right. Links for all my social media. Go to YouTube. Okay, we're actually live streaming on 2 channels. Remember, this is the screen I just told you about right there. It's live streaming right now. Okay, there's one and there's another. 2 live streams as we're speaking. There's actually 3 live streams on YouTube. The other one, I got to channel number 9. Sorry, I have to fix that. Oh, so anyway, let's take a look at the old videos. Okay, and the oldest. And there's the princess right there. Hold on.
Hi, I'm Gracie, and as you being part of my internet website company, which my dad doesn't like me calling it that, but I do.
That was 15 years, 16 years ago.
Getting weekly lists of stocks that I'll be trading, and every month you'll be getting 20 days.
And there's me.
20 days in February. There's over 21 days in the month of March. What does that mean? That means every single day you buy a different stock.
This is my favorite part. Watch this.
You'll be paying out dividends. Seriously.
All right. Yeah, I'm a goofball. Whatever. What is a dad supposed to do? Spend time with his daughter. As a dad, you do whatever you got to do to spend quality time with your children. Now, out of all my children, she's the only one that was interested in money. So she asked, Daddy, can you teach me? Well, here we are. Let's go back there. All right, we don't need that anymore. We don't need that anymore. We're going to need that. All right, so let's go back to there. There we go, and there. So I'm going to save this one, put it on the list. Oh, wait a second. I got to get rid of this thing. We're going to save this bad boy. For future reference. There it is. We're going to zoom into it really quick so you guys can actually see what it looks like, what it sounds like. Hey, that's my own cryptocurrency that I'm going to create. All right, here we go. Move it over there. By Albemarle, 20 February, the 165 call option, 535 is the profit, 15,965 is the investment. It's a 3.35% return for 1 week, if that makes sense. Let's save this one. I hate it when it does that. All right, maybe I have to get a new model. Who knows? All right, so let's get rid of this. Let's get rid of this. Let's go back to this. Let's go to right here. And here we are. All right, back to that. Give it a second or two. All right, so Meta, no. Albemarle, yes. Mike, thank you there, Mr. Mike. Fermi stock, please. We already looked at Fermi. It's going to be a no. Con Edison, ED. Yeah, I already said Consolidated Edison. Wait a minute. Is Con Edison different than Consolidated Edison? I don't know. Anyway, it has a monthly, so we don't do that one. Nick Later, how you doing? Oscar's house, how's it going? Uh-oh. Camp Road wants to take a look at B. What the hell is B? Seriously, what is it? B. Barrick Mining. Interesting. Ooh, and it actually looks good. Did you see that? High, low, where was it? Where is it? Up, down, up. That looks perfect. Well, now let's see. Are they consistently profitable? Camp Road, let's check it out. Back to Yahoo Finance. And we're going to put in B. B. See what it looks like. Barrick Mining. Okay, let's take a look at the dividends. 24, 22, 21, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9. Whoa, we got a winner. Let's find out. Camp Road, let's check. Wait a second. Wait. It does have weeklies. Oh, shit, yeah. All right. Let's take a look. 2006. Right there. 11, 15, 20. Uh-oh. Camp Road, did you see this? Went 15 to 20 to 12. It went down. Ouch. It went down 6 to 10, 20, 30. It dropped 30%. Camp Road, it dropped from 20 to 16. It's a 30% drop. Yuck. All right, let's keep on going. It goes up to 15, back to 20. For 5, ouch, hell no. Hell no. No, no, no. See, I could live with a 30% drop for one time, but not going from 20 to 5. 20 to 5. Yeah, no. Sorry. That's just. And I was rooting for it too. 5. Holy shit. Then it dropped down to 2 cents. Oh, hell no. Sorry, Camp Road. I appreciate the, what do you call it? The input. But I really wish you would have looked at those numbers first, brother. Going from 20 cents to 2 cents. What is that, 90% drop? 90. Yeah. Now, don't get me wrong. If you pick something, stick with it, good or bad. Money is money. Money coming in is money coming in. If you have the contracts for it, okay. Here's the thing. Take a look. Let's jump to this for a second. Let's get out of there. Now take a look. The lows here at 17, the highs here at 55, drops back down to 43. Now we're at 40, 48. Okay, nice movement. Down, up, she's going up. So she is going up, and the dividend's not the greatest in the world, but if it's okay, take a look at the covered call. If I buy it at 47.91, I could sell the 47.50. Look at that spring. I'd also play the 48. I'd probably do the 48s because it looks better. The 48's paying 121. That's over 3% also. But the question always comes back to, do I like this company? Now, I've never heard of it, and the reason why I never heard it, because they decreased their dividends. Well, once you decrease your dividends, you are off the Dividend Kings list. You're off the Dividend Aristocrats list. You're off the Dividend Champions list. And you got to start the count over again. Well, they decreased their dividends by 90%. To me, yeah, no thank you. But do the numbers work? It is bouncing up. It is at 47. The 48s are paying 121. So let's see what that looks like. Okay? Just to get, because somebody likes it. Okay, let's get out of there. Let's change this to that. Let's do the 48. There it is. One contract. It's going to go a lot quicker now that you've seen some of it go by. You say, all right, that makes sense. Here we go. This is what it sounds like. One covered call B, 20 February 26th. That's this coming Friday. The $48 call option. 130 is the profit. 4,700 is the investment. Well, let's check it out. Okay. Profit of 130, investment of 46.70, comes to a grand total of 2.7%. If you like that company, 2.7. So let's save that one. Let's take a pic. Where the hell did I put this? I'm going to start a new list. We just did one a couple seconds ago. Where the hell did it go? All right, let's do this. Come on. All right, let's take a look at this one. This is the one we just found. There it is. All right, let's figure this one out. B, 20 February, that's this coming Friday. $48 call option. 130 is the profit, 4,600 is the investment. And that's, what was that? That was 2.7%. If you like it, 2.7. Does it make sense to you? It either does or it doesn't. It's doing it more and more often. I should get worried. All right, 3.7, 2.7. 2.7 it was. All right, this was 3.3. This is 2.7. That works. It works great when it works, but when it doesn't work, it's a little frustrating. Let's plug this in. All right, let's get down to some of these questions. We got a lot of questions here. What do we have? All right. All right, what do we have down here? Always looking at the bottom. Are you like, oh, yeah, support resistance, no. Oh, I see covered calls on volatile stocks. I'm a degen. I have no what a degen is, but okay. Patrick, hello. Hunt, Max, nothing wrong with that if it works for you. Works fine. Hi. Ooh, maybe look at Carnival Cruise Lines. Ooh, let's take a look. Let's delete that. Let's get out of this. Let's go to there. Let's go back to here. Carnival Cruise Line. CCL. No. Ooh. Actually, we did Carnival Cruise Line. I think we did it last week. Well, the week before. Because I still have some. And I think I got rid of them over the weekend. I won't know until Tuesday. Because believe it or not, I don't look at my accounts over the weekends. And there's no stock opening tomorrow. No market open tomorrow, so I'm not even going to look at it tomorrow. I won't look at it till tomorrow night, which is fine by me. All righty. Next. Very important to keep track. Absolutely. Energy transfer. Okay, Max, I'm going to feel bad about this, but I don't like energy transfer. Okay, now, the reason I don't like energy transfer, Max, check this out. Hold on. Okay? Stock price is $18.75. Strike price $18.50. That's 42 cents. That's awesome. Really, it is. At the money. But what happens when, it's not an if, when the stocks go down? Because that's all they do. Up, down, 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 up. That's all they do. So when the stock goes down, you need to sell covered calls against it. But look, 3 cents on a $20 position. No. 1 penny on a 25th. That's only 4 strikes out. The numbers down here are horrible. So if it goes up, great. But what happens if it goes down? You're not bringing in enough, in my humble opinion. Now, Energy Transfer is just one of these companies that does that. And I stay away from it because, well, I like 1% a week, not a half, not a quarter. So I try to stick with companies that have good numbers. Remember Rule 5? Make sure all the numbers work. My hair looks terrible tonight. Yes, I know, I'm vain. You don't need to tell me. It's a weird thing to admit. Yes, I know. Would you prefer win rate over rate of return? Yeah. Now, here's the reason why I like win rate over rate of return. Win rate, I'm looking for 1% every single week. Consistency, predictability, safety, profitability. That's what I'm looking for in my retirement. Okay? 10 minutes a day. Now, if I want to spend more time on the computer, yeah, I could make a lot more money. I'm not looking for rate of return. I already told you. As important as money is to some people, it's less important to me. However, it is still important. So I'm looking for safety, predictability, and I don't want to sit in front of my computer all day. 5 or 10 minutes is perfectly fine for 1% every single week. So yeah, my win rate is over 99% because they're simple, easy, tiny trades. Because I only buy companies that are consistently profitable. And if it goes down, I will be able to write a covered call against it 1, 2, 3, 4, 5 strikes out of the money and still have something coming in. I don't know if that makes sense. But at this point in my life, my win rate is more important than rate of return. Because rate and return implies that you're holding it longer to suck more out of it. Or you're taking more risks. Yeah, no, thank you. I like safety, predictability, consistency, profitability. Did I say safety? Because it's kind of worth saying twice. That makes sense. All right. Let's keep on going. So, Patrick, I hope that makes sense. Are you using some kind of scanner? Patrick, the stocks I'm looking at are so simple, it's unbelievable. Yes, Odom, I know the stock's moving. I know the stock's, oh, the market's closed tomorrow. Patrick, I don't need a scanner, and here's the reason why I don't. Somebody out there is keeping track of who wins and who loses. Trust me, there's more than somebody. It's a whole bunch of people. So a dividend king, you cannot be a dividend king if you're not consistently profitable. All you have to do is go to Google, right in the Google search, Dividend Kings List 2026, Dividend Aristocrats List 2026. Somebody, and when I say somebody, I mean somebody who gets paid a whole shitload of money is keeping track of these. And then it's being cross-referenced because there's so many people that rely on this list. You know, hey, who's the best of the best? Who has consistently increased profits over and over? It's a question asked all the time. So yeah, the list is there. So do I use a scanner? No, it's either a dividend king or it's not. It's either a dividend aristocrat or it's not. Okay? And you can't be an aristocrat unless you have 25 years of consistent profits. It's kind of like water's wet, dirt is dirty, clouds are puffy, you know, certain things we just accept. So yeah, the list, dividend kings, dividend aristocrats, dividend champions, dividend contenders, so on and so forth. But no, I don't. I could have just said, no, I don't use a scanner. I got long-winded. Sorry. Energy transfer is at an all-time high. Thank you, they're up, down, even though I don't do it. Hello, everyone, sincerely. KTN, what's going on? Well, hello, KB Shop from India. Namaste. How you doing? What time frame are you using now? It's always the same. 1 year chart first, 90-day chart, 3 months, 90-day chart second, 30-day chart, and then if I need to, I'll go to the seasonality chart. But remember, it only takes me 3 or 4 seconds for each chart. High, low, where is it? Where was it? Where's it going? 3 or 4 seconds. Yeah, no thank you. Just about right. 10 minutes to look at. Sincerely, you got it. Hey, sincerely, thank you. Did I do SCHD? Now, Rob, I don't like, someone else asked about SCHD. Who was it? Hold on. La, 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 la. I saw it's SCHD somewhere. I just want to know who it was. Cause is in the house. There it is, right there. Christopher. Christopher's not the only one. Someone else wanted to look. There it is. Wooey and Christopher and Rob all want to look at SCHD. Before I look at SCHD and waste all our times, I like to say no, but let's take a look. SCHD, we're going right to the meat of the whole scenario. We're looking at historical data, numbers you cannot hide from because they are factual, and I love facts because you can't hide from the facts. They come out eventually. Let's go all the way back. SCHD, all the way back to 2006. Oh no. See, I already knew this, but 2011 was the first dividend. 2011 was the first dividend for SCHD. So no, it doesn't fit. It's not 20 years old. All right, let me cut you some slack. Let's take a look. Now let's see, is it consistently profitable or does it need a little help? Let's find out. Okay, 2011, not quite 20 years, but hey. 4 cents, 4.6, 6.8, 6.9, 8.6. Hey, it's looking good so far, right? All right, 6.8, 6.9, 8.6, 6.6. Wait a second. That's a 20% drop. Wait a minute, 25% drop. Did you see it? A 25% drop. Okay, 2012. The profits dropped 25%. That's just the first time. Hold on, let's see if it gets worse. Okay, so it goes from 8 to 6 to 7.5, 7.7, 8.3, 8.2. That's backwards, by the way. That's twice they lost money. Twice. 8.2. 8.2. 8.9, higher 8.4, lower, that's 3 times. 9.1, okay. 9, that's 4 times. 10, 9.9, 5 times. 9.0, 6 times, 999, 7 times. It's 7 times. It's gone backwards. What I'm looking for is higher numbers. 10, 12, 13, 15, 17, 21, 27, 44. Higher and higher and higher. SCHG just doesn't do it. And it's not 20 years old. So, no, no, and no. SCHG just doesn't do it for me. If you like it, hey, more power to you. Let's see a look at the chart for SCHD. SCHD. Hell no. I should have looked at that first. I'm not buying anything at the high of the year. Next. Next. I can't believe I fell for that one. You got me on that one. DLTR. 3 of you wanted to look at it. Why? It's at the high of the year. What can you possibly see other than, hey, I'm selling mine? Not, all right, anyway. The Chipster, what's going on? Detroit Tiger. All right, we looked at that. We looked at that one. Next one on the list is IRE. IRE, what the hell is that? I can't even figure that one out. Okay, IREN? No. IRE? Yeah, IREN. It's a monthly. I don't do monthlies. The numbers just don't work in my favor. And they're a pain in the butt. No, thank you. All right, DLTR. Jasper, DLTR. Dollar Tree. Ooh, this is a maybe. Did you see it? 3 to 4 seconds, okay? High, low, where was it? Where is it? Look at this. Down, up, down, up, down, up. The high is here. Pullback already came. Profit taking from here to here already came, done and gone. Now she's going back up again. Let's, before we even zoom in, do the numbers work. Now, I don't know anything about the dividends for Dollar Tree, to be 100% honest with you. Okay? But if you like it, you should check it. And then you should ask yourself, is this something I want to buy? Let's look at the numbers. 126. The 126 are going for 251. That's more than 2%. Well, I like the company. I like the position where the chart is. Now let's zoom in a little closer because we look at the numbers and it's already over 2%. Quick numbers. What are we looking for? Stock is 126. 126. What's 1% of 126? It's 126. Okay? 126 is 1% of 126. Okay, $1.26 is 1% of $100.26. Kind of weird, right? So all we're looking at is for $1.26. What is the at-the-money strike price going for? $2.51. That's over 2%. Is that quick? All right. Next, let's take a look at the 30-day chart. Is the 30-day chart? All right. Somebody asked earlier, 90-day. There's the 90. High, low, is, up, down, up. Sticks out like a sore thumb, doesn't it? And it doesn't take hours to see it. Okay, there's the high. There's the low. That's where it was. This is where it is. Up, down, up, down, up. That's easy. 3 to 4 seconds. It should all be it takes. Okay, now the last 30 days. We're looking to January 15th. There it is. Last 30 days, the thing sticks out like a sore thumb, doesn't it? 30-day high, 30-day bottom. Now she's shooting up. There was a little tiny bit of a correction right there, which is even better, but she is going up. Ooh. What happened on Friday? She went from 115 to 130. That's $15. That's a 10% jump. I wouldn't be doing it, because that's a 10% jump right there. From here to here, and then Friday she pulled back a little bit. Does that mean profit taking starting? I wait and see what happens on Monday. If she's higher than this point, 130 area, yeah, maybe. Let's take a look at a covered call, see what that looks like. Let's get rid of this. Let's do the 126. Change that to that, the 126. There it is right there. Just one contract. La, 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 la. There it is. And here's Johnny. One covered call, Dollar Tree. 20 February, that's this coming Friday. The 126 call option, profit is 302. Investment is 12.3. Okay, well, let's find out. What return is that, calculator? Calculator, 302 divided by the investment, 12,298. Whoops. 98, not 9. Man, 98, I was right. There it is, 12,298. 2.4% for 1 week. So there's those questions rattling around in your head. Does it make sense? Yes or no? Do I like this company? Yes or no? Does it look like someplace I'd put my money? Yes or no? See how easy it is? Yes or no? You can't do it? Flip a coin. Should I buy it? Heads I will, tails I won't. Is that difficult? Okay, tails I won't, heads I will. However you want to do it. Does it make sense? Do you like this company? Is this someplace you feel safe putting your money? It always comes down to that. Do I like this company? Do I feel safe? Is this something I'd be okay with handing down to my kids? Interesting questions. Okay, it's 2.4. Let's save this one. Oh, way up there. $2.4. I like 2.4. Imagine that, 2.4 every week. Uh-oh, got a low battery over here. Let's play swappy changey. Here we go. Okay, here it is. And there she is. Dollar Tree 2026. That's this coming Friday. The 126 call option. Profit 302. The investment 12,298. It either makes sense or it doesn't. You either like the company or you don't. There's lots and lots of trading strategies out there. Find one that works for you. Okay, this one might be too slow, might be too boring. For some people it is, because, you know, it's not a lot. 1% a week is not a lot. Anyway. What was it? 2.3? 2.4. 2.4. Yay, 2.4 for 1 week. All right. Murata Convoy. Which is your best pick? VYM? No. VDADX? No. VIG? No. Now, the reason, Murata, I say no to all of those, they haven't been around long enough. Okay, there's over 300 companies that I like that do fit. All of those don't fit. Same thing with Hood. Doesn't fit. Sorry. Chipster, we looked at Lowe's earlier. It was a no. All right. Christopher, SCHD, no. GGRO, no. FDVV, no. Like, don't you pay attention to these things? Are they consistently profitable? No. Do they have 20 years or more of increased profits? No. It's really that easy. Either it fits or it don't. Ooh, check it out. Steven wants to take a look at Consolidated Edison, ConocoPhillips, Capital One Finance, International Paper, and Phillips 66. Sorry, Steven, don't have enough time. We got 10 minutes left, and I want to answer some questions. Okay, what do we have? Jack, if you had 100,000 and followed this strategy for 6 years, you would have 800,000. How can you not be rich at this point? See, Jack, that's a weird question. Okay? Now, you're under the assumption, okay, that the numbers compound. No. $100,000 only brings in $50,000 a year. In 6 years, what do you got? You got $100,000 because you got the $50,000 you spend year after year after year. So it doesn't compound if you're spending the interest. That's what a lot of you people are missing. So if I had 100,000, I get $1,000 a week for as long as I continue doing it, which for me would be every year. But here's the thing. Is that 100,000 growing every week or every month or every year? Well, if I'm spending, paying my mortgage, paying my insurance, paying my gas, paying my groceries, giving money to the kids when they need it, is it growing then? No, it's not growing. It's being spent. Now, I don't work anymore in a conventional job. Okay, so I don't go and punch a time clock. So I have no money coming in other than the money from my investments. So even at $1,000, a $100,000 investment, it's still only $1,000 a week. Well, and then, I get to get Social Security next month. I'm supposed to hypothetically get my first Social Security check in March. I was like, yeah, I'm going to take a picture of it and frame it. I told them I want them to send me, should we do automatic deposit? I said, no, I want to get the checks. I really do. Because I get the phone app, you just take a picture of it, and then it goes right to my account. But no, I want to save them. My very first Social Security check, I'm going to frame it and put it on the wall. All right, anyway, besides the point. So I hear what you're saying. And logically, that makes sense. But you're missing a few key factors. Even though I make 1% every week, you're under the assumption that that grows and grows. No, I spend that money to live comfortably. All right? So hopefully that helps you out. Jennifer can hear me. Way to go. Can you do the strategy with 3,000? See, Astro, you can do this with any amount of money because remember, you have to start somewhere. Okay, I started 30 years ago with $12,000, $12,500, I think it was. I took a second mortgage out on my house. My wife was pissed. Okay? Yeah, I slept on the couch for a couple of weeks. I did, seriously. So you can start with whatever you want, but it's going to take you longer, which is okay. But how long is it going to be if you don't? Think of it this way. Let's say you can 10x that, okay? 30 from 3,000 to 30,000. Let's say you can do it in 10 years, hypothetically speaking, okay? If, hypothetically speaking, because I know some of you people get literal, if you can 10x your money, so you go from 3,000 to 30,000 in 10 years, okay? What's going to happen in 10 years if you don't? Interesting question, isn't it? What's going to happen in 10 to 20, 30 years if you don't? And you don't have to. I'm just saying. 10 years is going to come and go anyway. So why not invest in your future? Hey, Jack, if you spend $700,000 throughout those 6 years, are you still rich? Depends on your spending, don't you think? Thank you there, up, down, because it does make sense. Riven, when up, missed out. Yep, I saw that. Any copper mines? Do you know of any copper mines that have been consistently profitable for 2 decades? You let me know, and I'll take a look at them. Jack, I'm assuming no spending of that capital. Well, in that case, you're 100% correct. But think about it, Jack. Okay? Now, most people plan to retire at retirement age. So you got, I think it's 3 or 4 opportunities for retirement. Listen closely, because some people don't really understand this. Number 1, okay, retirement's coming whether you like it or not. Okay? There is going to be a time where you just don't work anymore. Let me give you a brief example. Number 1, you age out. And a lot of you may know this one. Okay, you go to work, or my grandfather went to work, my father went to work, and the boss said, oh, hell no, you're just too damn old, keep your ass home, it's time for you to retire. That's aging out. You're too old to work, you age out. That's number 1. Number 2 is my favorite. You can take this job and shove it. I don't need to be here no more. When you have enough money coming in on a weekly basis from your investment and you don't need to work and you don't want to work, that's number 2. That's my favorite. Number 3, toe tag. Do you know what that means? That means you die on your way to work, on your way home from work, and you don't get to collect any of your Social Security or any of your retirement. You work 30, 40, 50, 60 years of your life, and when it comes time to reap all those benefits, boom, you die before you get the chance. So only 3 ways. You got to figure out which ways works for you. You either know what number you need to come in on a monthly basis to say, you know what, I don't need to work here no more. This aging out thing, that's for old people. I'm not old. I want to go out and enjoy my life. You do what works for you. But you're right. All right. I'm assuming no spending that capital, then you would have 800,000. I get it. I'm making 400,000 a year. I get that also. And a tax-free savings account. You would be rich for sure. Well, 400,000 a year is, to some people, is not a lot. Okay? Because some people, they need more. Because everybody's on a different journey. Everybody has their own criteria. Everybody's different. That's just the way it is. Okay? $1,000 a week may work for you. $5,000 a week may not work for Tom. Okay? Maybe Sally needs $2,500 a week. Maybe Tim needs $10,000 a week. You just don't know how other people spend their lives. But for me, I'm okay right where I am. I'm perfectly happy. I should say perfectly content. Because I get goals and dreams and I want to move forward and I want to share more. But, you know, we'll see how it all unfolds. Yes, then you certainly be okay. All right, got it. NDSN at yearly high. That would be a no, absolutely. What do we have over here? The first 20 minutes or so had sound, then after that it disappeared. Yes, I know, I told you. You're on iPhone number 8, which is channel number 9. Okay, channel number 9 has not been perfected yet. And when someone's on the phone, the other phone, yeah, this is the backup. So we broadcast on the backup phone, and we haven't got it squared away yet. So I'm sorry about that, but it is being recorded on the other YouTube channels. Okay, I got 3 YouTube channels. You just picked this one, and it hasn't been tweaked yet. How is amazing. Okay, NSD yearly high. Okay, Abigail. How is amazing. I'm not quite sure what that one is, Abigail, but all right. Jack, I would keep Nucor on my watch list for next week. It's dropping a bit, so I would wait for the reversal. Excellent idea. Oh, the 9-year-old, yeah. Yeah, she is a little interesting. Hold on, right there. Didn't work. Try it again. You gotta be kidding me. There we go. Dragging the puzzle piece to make sure I'm real. 2 to 5, yes. Okay, thank you there, Abigail. Amazon, okay, yep. KOP, okay, the next one, all right. Hey, James, hope you are fine and doing good. Thank you, I'm all good. What is your trading strategy in terms of setup? Okay, it's a great question, really is. But we're running late. We got a couple of minutes left, and I want to answer questions. But if you ask me again tomorrow, sorry. All right. PDGRX. John Preston, I'm going to apologize now, brother. It's a little late, and I usually done at 11. We're going to do this all over. I do this every night. Okay, so if it's really interesting, just come back and try to get your question quicker. Because when people ask me in-depth questions, I run on a tangent, kind of like what I'm doing now. I can't get to all of the questions. What is your trading strategy in terms of, all right, well, check out that one tomorrow, maybe. Amazon, tomorrow, maybe. Good evening. Hey, up, down. Joey, what's happening? No weekly options for NUE. Wait a minute, is the NUE Nucor? No, well, NU is Nucor. What is NUE? Oh, no, it's going to boggle my mind now. NUE. Nucor, I was right. Yeah, Nucor has weeklies. Oh, they don't? Didn't they have weeklies before? Anyway, doing good. All right. Good, although so many holdings are down, so I'm carefully selling covered calls on a cost basis. Hey, brother, I'm on the same page with you. I got 7 accounts, and there's one account where every single thing is down. Now, that happened to me 3 times. 3 times in 30 years, every single position was down. Usually, it's like 1 or 2 are down. Sometimes 3. But all 7 or 8 of them? No. It happened 3 times. That was it. Don't get me wrong. Money's still coming in. Anyway. Joey, I know what you mean. Right there with you. How could I try the strategy with only 3,000? Keep showing up, keep asking questions, and I'll get to it. Good. Yeah, I saw that one. I retract my comment earlier. All right. Up, down, trader, our strike. Are the strike prices higher than what you bought the shares on those covered calls you're selling? Just curious. I have shares I'm looking to sell covered calls on, but if it goes in the money, I lose on the shares. Okay, this is a great question, Mike, and you're not the only one in the situation. I come to this situation every single week. Now, remember, I do 7 accounts, so there's always something going wrong with one of them somewhere. The idea is, okay, wherever the stock price is, that is called at the money. Let's get out of this. I love it when good questions come up, okay? Wherever you are, the current price is at the money, okay? That's where the separation between this one and this one. That's in the money, out of the money, that's at the money. So when I'm looking at stocks, especially when I'm selling a covered call for less than what I paid for it, and if stock bounces, goes past, I could lose. So this is specifically for that. All right. So at the money is the highest rate of return. 1 strike out of the money, it's a pretty good return, but it has a little bit more risk. Okay? 3 strikes out of the money, well, you're bringing in something, not nothing to write home about or celebrate, but something is better than nothing. So 4 strikes out of the money on this one is 30 cents. Okay, 30 cents on a $183 stock, well, that's only little over, almost 1/3%. A third, but that's 1/3% this week. What's going to happen next week? What's going to happen the week after? Now remember, you're buying companies that have good returns, which means the dividends increase every year. So if the dividend's increasing every year and they're still making good money and they're giving you something, even though it's not 1%, maybe it's a half, maybe it's a quarter, something is better than nothing, and you still get higher dividends every year. So it's kind of like a little bit of a twist to that dividend, just regular dividend investing. You buy the stock, you collect the dividend every 90 days, 4 times a year. Well, the company's profitable, so those dividends increase. Also, they have weekly options, so it allows me to collect dividends and collect premiums every single week. But if it happens to hit my target, my sell target where I'm profitable, fine, next one, because that's what they do. Up, down, up, down, up, down, up, down, up, down, up, down. So yeah, you're going to buy something and it's going to drop. And then you're going to buy something and it's going to go up. Because that's all they do, up, down, up, down, up, down. All right, it's past 11 o'clock. I'm going to breeze through the rest of these questions. I hope that made sense. Time for a haircut. All right, what do we got? Truck camping adventures. I only trade PDH and PDL. Okay, nothing wrong with that. Mike says it makes sense. Mike, sorry, if the strikes are lower than your cost basis, I roll them up and out. Ooh, we didn't talk about rolling up and out, but ask that question again tomorrow. I'm just trying to get the questions done really quick before I take off for the night. So yeah, great idea. Up down is right. If the stock drops, it is up to you to set alerts so it doesn't go by and you don't lose any money. The alerts are there, they're free. Use them. Okay? My stock dropped. Now I'm trying to sell a covered call, but if it goes up, I could lose. Set an alert. If it hits it, you get an email, you get a text, it goes right to your phone. Then do something. Okay? You never lose money until you agree to sell it for less than what you paid for it. And if you don't keep an eye on your money every day, well, it's your own damn fault. That's like if you have a dog and you don't feed it one day. Well, it's your own damn fault for the repercussions. Consequences. What's going to happen? Try not feeding your dog for 3 or 4 days. See what happens. Try not looking at your money for 3 or 4 days. See what happens. It's the same thing. Not really, but you know what I mean. La 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 la. Oh boy. I miss all these questions. I'm sorry, guys. I got so many questions tonight. It's Sunday. All right. What am I thinking about? RIE, Italy. Sometimes finding a 1% on a weekly option premium, it's hard to find. Oh, hell no. Dude, Italy, dude, you got to send me your number. We got to chat. There's so many companies out there. There's so many options out there. How can you not find one? Okay, the Dividend Kings, Dividend Aristocrats, it's 300 companies. Those are the ones that I like. Now, what about the other ones? What about the ones that have 15 years of increased profits? The ones that have 10 years of increased profits? What about that don't have dividends at all? There's always something to find. All right, anyway, Detroit Tiger, GPUS tomorrow. Frank, how you doing? Timmy, what's going on? The Chipster. B-Dub, what's going on? Christopherls. Do you recommend? I don't recommend anything. Okay, right off the bat. Oscar, thank you for that. I don't recommend anything. What I do recommend is do your research. Ask yourself those questions. Do I like these? Is this where I want to put my money? Those are questions you should really ask. And you shouldn't be asking me. SCHD, no. DGRO, no. FDVV, no. Enza, good evening, Enza. Cousin Astra, what's happening, brother? Kevin, ooh, I like Cisco. I do. Brandon, thank you there, Brandon. Enza, thank you. Whoa. Frank, we already looked at our IRE. Calm, how are you? This is my life now. I'm so happy. Yay! I got a fan club. Woohoo! Vino, what's happening, Vino? Miata Pastor, good evening, sir. I am investing for my 2 daughters, and they are 2 and 3 years old. Awesome, dude. Now, if you want to have a chat, you're going to love the trading strategy I came up with for my grandson. Okay, he's 6. Okay, we're going to start him out with $50, and every week, we grandparents are going to take whatever change we can find, throw it in a cup, and hopefully once a month or so, or maybe once every couple of weeks, who knows, we'll throw the money in there. All it is change. He's 6. We're hoping that in 12 or 13 years, it'll be enough when he graduates, and then he decides to go to college, buy a house, one of those things, buy a boat, float off into the sunset. Heats, I love Procter & Gamble. Universal Soldier, how can you make money if you're selling for less than you bought it for? Oh, hold on a second. Universal Soldier, that's a good question, and I want to give you the what do you call it? Without knowing who you are, most people don't use those kind of words unless it means something. Universal Soldier, check this out. If I buy at 183.23 and I sell it at 180, you're under the impression that I'm losing money. Well, if I buy it at 183.23, I sell it at 180. In order to sell it at 180, someone has to buy that option from me. What are they paying for that option? Well, the 180 option is going for $4.50 to $5. That means I'm walking away with 180 plus the 450. That's 184.50 to 185.30. That's more than what I paid for it. That's how I'm making the money. The thing is, the stock can drop all the way down to 180 and I'll still make all that money. As long as she stays above 180, I'm walking away with that profit, whatever this is, that is, adding, subtracting, blah, 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 whatever that comes to. Well, if I'm selling it for less than what it's currently at, it probably should sell. And whoever buying it from me is paying this right here. That plus that is more than that. So I'm selling it for more than I'm paying for it, because the person who buys the option from me is paying enough to offset the loss that I'm taking, which you're right. If I buy it for 183.23, sell it for 180, I'm losing money. But I'm selling it to someone on a contract, and for the contract they're paying me $4.50 to $5.30. So they're paying me enough to cover my loss, and I still walk away with a profit. That's the beauty of the whole thing, is that I could sell for a loss and still make more than 1% every single week. I know it's crazy, but that's what it is. If I buy it for this, sell it for that, I walk away with this. How much profit is that? And when I do that, check this out. You're going to love this. Okay, when I do that, the 180 right there. Let's just do one so you can see. Here it is. Here we go. So this one right here, I buy it at 183.23. I sell it at 180. Okay? I walk away with $167 on a $17,000 investment. Now I know that doesn't sound like a lot, but here's the thing. I get all this money back, and that's my profit right there. So the profit and the investment is at more than 1%. Because remember when I said I want simple, safe, predictable, consistent 1% per week. What am I buying it for? What am I selling? How much am I walking away with? Is that more than 1%? Remember rule 5? Make sure all the numbers work. What am I buying it for? What am I selling? What's my profit? What am I walking away with? Is it 1% or more? Thank you. It's either yes or a no. Simple. All right, it's past 11 o'clock. I can't do the rest of the questions. Guys, we'll do this all over again tomorrow. Yeah, I know the stock market's not open tomorrow, but I'll be here tomorrow night anyway. You guys have a great night, and we'll do this all again tomorrow. Tomorrow. We'll see ya tomorrow. You're always a day away. Ba-da-dum-bum-bum-bum. Okay, and now the end is near, and so I face the final curtain. My friends, catch you guys later. I'll say it clear. Oh, right there.